First off, we have Travis Whitford, and he's the branch manager for W.J. Bradley Mortgage Capital. And he's here to talk to us today about that cabin property or second home and some facts about that, some mortgage facts about
that guy's a mortgage expert. We're excited to have him in studio. We also have the guys over at Alexander's Moving, or as we call Mobility, and we've got Mia Erickson and Kevin Quagliano. So we'll be talking about how to get that move started from start to finish. So
yeah, I think it's going to be a great show. Well, let's start with Travis. Travis, what are some of the facts about vacation homes and financing of them?
Yeah, it was pretty interesting facts that I found. Statistics from the National Association of Realtors that the median income for people buying a second home or a vacation home was $99,000. The average age of the buyers were 47 years old. The average price was $211,000. And the main reasons for buying that property was either for a family retreat or a future primary residence for retiring.
Man cave, fishing shack.
Yeah.
The important stuff, right, guys?
Yeah.
That's right. Well, I think that there's maybe some misconception out there of how hard it is and how difficult it is in today's world to get financing for a second home or vacation home. Is that really true?
It's really not. You have to qualify for your current home and all your other debts. The down payment, minimum down payment requirements is 10%. So 10% and qualify for everything. You can buy a cabin.
I think it's pretty interesting that with a $99,000 income, and assuming they probably already have a primary residence, that people can qualify for a second home mortgage.
Yeah, if somebody like that, they probably do a pretty good job of not having a tremendous amount of other debts. They're not carrying 2 car loans, the boat loan, and a bunch of student loans, and they're probably sitting pretty good.
Yeah, I imagine. So what are some of the other benefits to owning a vacation home?
Well, if you're like Andy and myself, it's excuse to get away and act like a kid again.
It's experiences, right? Memories?
That's right.
Absolutely.
The property appreciation is something that always you can think about. Possible rental opportunities and tax advantages as well.
I think there's a lot of people out there that they don't really realize that today's money is so low, proportionately to what the actual lakeshore properties cost, and it's. When you buy a lakeshore home and you generally will hold that property longer, you may actually, sit there for 30 years and own it and actually pay the thing off. The idea there is that when you borrow money like we are right now, where it's so reasonable and so affordable, it way outweighs paying an extra $10,000 or $15,000 or $20,000 on that cabin, because over time you save literally thousands of dollars by getting a better interest rate. And so, not because of the beautiful sunshiny day we're having outside, we're bringing this up. I think we're bringing it up because we see it as an opportunity for the listeners that have ever thought about a cabin or a second property to get out there and investigate and do some thinking.
Yeah, the cost of money is very, very cheap right now in the grand scheme of things. So it makes it a little more affordable to buy a cabin this day versus 15 years ago.
One thing I had asked you earlier, Travis, and I wondered about this. I've seen a lot of cabin properties purchased on a contract for deed, and now they're coming up for to pay off the contract, the balloon payment. Is that possible with a mortgage?
Of course, you can, as long as the contract for deed is recorded correctly and they're vested in title accurately, you can easily refinance that contract for deed. Otherwise, if that's not the case, you almost kind of got to restructure it like a purchase transaction again.
Andy, it really seems like middle America is squarely able to purchase a second home, where I kind of thought I had a misconception that maybe it was out of reach for many people.
Yeah, well, I think you're surprised. There's a lot of, I'm seeing anyway, and some of our co-contributors up in the Alexandria, Brainerd areas are telling us that they're also seeing family partnerships, which is something interesting, which you as an attorney can maybe help us a little more on. Having it where it's an LLC where the family members all own individually, they get their week, it's almost like a fractional ownership. And the most difficult part about that, I think, though, is that if everybody's not paying cash, how do you finance it, number one? Or does everybody go on the same mortgage and then there's an LLC filed behind it, just for liability reasons? But there's a lot of creative ways I'm seeing families getting into these properties. So you don't have to own it by yourself and take all that liability by yourself.
Well, I think that makes absolute sense. And something such as an LLC or a trust, maybe, they give structure to to the ownership so that they can have a schedule of who uses the property on Memorial Day, who has
Right.
it on 4th of July, and so forth.
Well, because there's liability there. I mean, if you have 8 brothers and sisters, and all of a sudden, mom and dad pass away, and the family inherits this in a trust, and a brother all of a sudden has a judgment for a bunch of money put on him, and that get leaned onto the cabin now. So there's ways that you want to protect it, and I think that seeking legal advice would obviously be the way to go about it first before you jump into it.
Absolutely, and then that's also when everyone is in agreement on how the structure should work. You don't want to wait till there's been a death or another issue to then try to decide who's going to portion payments and so forth.
Yeah, because I think mom and dad think a lot of times they're gifting something that's going to be wonderful for the family to enjoy. It ends up being the biggest nightmare of some of those kids' lives because now their brothers and sisters are fighting, and I think that as importantly as to put it together, to having the exit strategy as if it doesn't go together, how do you help the kids get out of it?
Absolutely. Well, one thing, bringing Travis back into the conversation, you mentioned 10% down. Is that typically in cash, or are there other forms of down?
Yeah, well, at the end of the day, you're bringing cash to closing, but how do you go about getting that sometimes if you don't have the liquid cash? One option is if you are in an equity position on your primary residence, you could look at doing a cash out refinance or a home equity loan to obtain that. If you have a 401k or IRA that allows you to access that before you get to a certain age, that's an option as well. Or sale of another asset if you owned a ATV or vehicle that you own free and clear, and there's lots of ways that you can get there.